Traders, happy Sunday. Hope your team is doing well, either on the pitch or on the field. This is SageFT from the Live Trading Desk. We're coming at you with another Sunday night review and Rev-Up. Let's dive right into the review. What a week it was. What a week of all-time highs. I want to start with this bar right here, which would be Sunday night, Monday. Now, we can see on the daily chart that it's high and tight, looking for a press into new all-time highs. Just the basis of this whole thing is, this is what inflation looks like. This is what your grocery bill looks like. I want to remind everyone, the reason we keep going into new all-time highs, even though the economy is absolutely crumbling at our feet, is it takes dollars to purchase stocks. If the dollar has less purchasing power than it did last month, it takes more dollars to purchase each share. So I want to remind everyone the definition of inflation: too many dollars chasing too few goods. Anything else is rhetoric. Too many dollars were printed and it's chasing too few goods. Now there's starting to be too many goods coming on the market as well as too many dollars. They're lowering interest rates, which is defeating the purpose of them raising the interest rates like they did. Let's go to the 4-hour chart. Let's take a look and see what happened throughout the last week. So Sunday night, we gapped open. We didn't break any structure. All we did was come into a prior swing high, as you can see here. And it just decided to sell all the way to the exact spot that it sold to the week before and the week before and the week before, right? So let's take a look at that. I have it marked out here. Notice there's no close underneath this level. So as long as we're above this level, we're bullish. So if you take a look at this, this was the perfect buying opportunity. So how were we able to buy it? Well, let me show you. On the 4-hour chart, we were able to find draw on liquidity, exhaustion, potential exhaustion, removal of that exhaustion, and the fractal of the 8 EMA and the 20 SMA firing at the same time. This is the perfect trade on the 4-hour chart. We just take it and we run with it. We get an order block here, right? A pause, a stutter step, and then we come into the high-to-high trend line where it needs to make a decision, and it takes it higher. Now, as we were in the beginning of the week, what was happening was we had CPI on Thursday and PPI on Friday. It was all hands on deck as we waited. The Fed numbers came in exactly whatever they were going to say. The market liked it or hated it, I guess, right? It really depends on how you're looking at this. Just because the stock market's going up doesn't mean that you're making money. If the rate of inflation is higher than your return on your stock portfolio, are you really making money? The answer is no, you're actually not. So what we were waiting for was, what was the conclusion of price coming back to this level? Now notice we were able to take first target here at around 58.03, okay, and then second target 58.32, all right, and now we're above that. Now let's go to the 15-minute chart. Were we able to capture very, very precise signals in relation to the 15-minute KISS chart? Well, Tuesday, we had a very, very nice up day, and then they kind of sold into it. They rallied again. So yes, there were some really nice position one signals here, a little bit counter trend as it awaited the next series of data points. And then once we went right back into the position one with the fractal 8 EMA crossing the 20 SMA, it was go time for the longs again on the 15-minute chart, right around early morning of the 9th. And as you can see here, there was a lot of wide range chop. How were we able to take advantage of the wide range chop? Well, we waited for it to resolve itself, and back into position one, we were able to take advantage of in-process trades again on the lower time frame. Okay, now that we've reviewed what happened last week, let's take a look at what the news is going to be next week. And let's see if we can formulate any sort of plan or find some price levels here. All right, so Monday is a bank holiday. Bond market is closed. So the NYSE will be running on its own power or merit. We have a Fed speak, so not any relevant economic data points coming out. But then Tuesday, we have more Fed speak. All right, Thursday morning is really where we get retail sales. And basically that's it, besides a ton of Fed speak. So a very slow news week. So we can expect very low volume on Monday. When we trade low volume, there's two ways that this can work. Most people think that the market goes sideways when it's low volume. Well, partially wrong, partially correct. The other way that the market can move on low volume is it can pick a direction. It can become directional. If they want, they can jam this thing higher every single day. Do I expect that to happen? No. Could it move up every single day? Sure. Now that we've got the news out of the way, let's take a look at what we can see. And let's just use the 4-hour chart. This is the easiest way to see it. Well, what we have here is a nice bullish pattern. We get the break, we get the retest of the break, and now the training wheels are off and we're off to the races to see which way this thing goes. Now, what could happen is this high to high trend line could become support. If we break that support, we could come to this low to low trend line here, or this low to low trend line way down here. Everything is plausible. That would be kind of a big move, 200 points on a very, very slow, low volume potential week. That would be quite the move. So could it happen? Sure. Will it happen? I don't know that answer. Now, do we have any unfilled or inefficient points in the market? Yes. All right. We actually have a couple of them. Now, what I want to do is I want to point out that the market is an efficient machine. It doesn't like inefficiencies. You can see here, it reclaims the inefficiencies. So if we're going to reclaim inefficiencies, it has one here, here, and we could say here, but this one was made whole or made efficient, right? So if we start to slide, the first one that we would look at is this inefficiency, and then these two down here, if we will. If we break through here, we're looking at this one. We're going to look and see if they reclaim back to a low to low, or if they really get it going, which let me show you where this low to low comes from. Point A, point B, boom. Okay, now if we get a big move higher, we've got a couple data points that we can look at. All right, the first one is 59.63. Okay, that you can see it here. Let's go to the 4-hour. Okay, and then we have another one here to here, which would be around 6,000. Okay, so these are the things that I'm looking for next week. Last week was a great trading week. I do believe we had a very, very high success rate of green versus red traders in the live trading desk. If you'd like to learn more about how we trade, jump on over to SageFT.com, pick up the game plan. We'll put the link in the description. Also, if you'd like to join us and trade with us live, Monday through Friday, 8 a.m. to noon on the YouTubes, and we will see everyone tomorrow morning. Good night.